Hey everyone, me Kevin here. Boy oh boy, I've got a bullish and quick update for you from the Federal Reserve. This is pretty remarkable and highly unexpected. So this is going to be great. I just want to quickly remind you that link to FTX in the description down below. Use that code MEETKEV. You could trade Bitcoin, Doge, and anytime you trade crypto worth more than $10, you get free crypto. So make sure you check that out via the link down below. Okay, folks. Holy moly, let's talk about the update that we got from the Federal Reserve. So, first of all, if you just Google Fed hawks versus doves, the hawks are the ones that are like, let's raise rates really, really fast to get ahead of inflation because we're behind the curve, okay? Those folks, if you Google a list of that, there are three super hawks: Bullard, Kaplan, and Waller. The problem is, Kaplan is not a voting member. So really, you're just going to focus right now on Waller and Bullard, because those are your two voting members in 2022. And guess what we just heard from both of them? Something bullish. That is surprising. Why? Because just a few months ago, about 3 months ago, Mr. Bullard was saying, folks, we need to essentially rug pull. We need to go for a 100 basis point hike. We need to go extreme here and finally tighten monetary policy to get ahead of inflation because we're behind the curve, we've lost the plot, and we're losing credibility. And people agreed with him. They're like, yeah, I mean, he's kind of right. Well, now they're responding to arguments that the Federal Reserve is behind the curve. And they're saying, well, if we knew what we knew now, yeah, we would have raised rates sooner. But you know what? No one knew, and that's just the nature of monetary policy. But for those who are criticizing that now the Federal Reserve is behind the curve, we disagree, because there has already been a substantial tightening in financial markets and credit markets. Take a look at how high interest rates have already gone. Look at that 10-year already sitting at 3.1%. That is pretty dang high. We are now beating levels that we were at in 2018 during that cycle that pushed the stock market down 20%. We're basically that same level of down in the NASDAQ now as we were at the end of 2018. In fact, I think we're already surpassing how much we've sold off, which is pretty wild. But that's not the really bullish part. I want to talk about the really bullish part right after I mention, folks, okay, like between you and me, I just put one of my last properties on the market that I have to sell. I've got 2 more to sell, and I'm like, whoo, we're getting pretty dang close here, and things are slowing down, man, okay? I'm just saying, like, between you and me, I'm actually seeing it now, and I'm like, I'm just at the tail end of, like, selling off my portfolio. I've already finished the vast majority of it, and I'm like, ooh, no, here it comes. So, you know, like, the tightening is here, okay? But, you know what, there's good news in this, and that if you're prepped to buy real estate below market value as values start potentially compressing a little bit, I think there's a real potential you can make some really good money. And if you're confused or intimidated by real estate, I have no idea why you wouldn't want to invest the $600 or $700 in the real estate investing course link down below, where you can learn everything from literally a complete novice. Like if you know nothing about real estate, and you can get to like max level real estate knowledge, more than even MBAs learn, because I don't think they learn the street real estate that's actually going to make you money, in my opinion, of course. Check out the link down below. Use that coupon code that expires in 9 days. Check it out. Okay, folks, listen to this. The Federal Reserve, both Bullard and Waller, are now saying that they actually believe the pace that Jerome Powell is on with 350 BP hikes in a row is solid, that they don't have to go further. In fact, another member of the board, Mr. Barkin is kind of like, he leans hawkish, but he's a little closer to the middle. He says, quote, I never rule anything out, so I think 75 basis points would be on the table. This is the 75 basis point more hawkish tilt. But he says, I'll just say right now, our pace is pretty accelerated. And so if you go to the pace that Chair Powell suggested, that's already pretty accelerated. On top of the fact that you've got Bullard and Waller now saying, hey, you know what? We're on the right path now. Now we just need to walk the walk. We need to do what markets are expecting us to do, and we're going to be able to take control of this and hopefully engineer a soft landing. And this is where I like looking at my favorite statistics to see if the Federal Reserve is on the right path, because they're not always on the right path. And the two ways we always look at are the 5-year break-even rates, and then, of course, consumer expectations of inflation. And I'm going to zoom in on this, and hopefully you can get a really good image of this. All right, folks, you see this right here? This in this corner here is where war started. And when war started, we had the fear that inflation could potentially go down if individuals stopped spending, but that's not what happened. People kept spending, and so we initially had this shock of, oh no, commodity prices are going to go to the moon, oil and commodities and all of that, so inflation expectations went up. But then we thought, oh, but maybe that'll lead people to spend less money on travel and stuff. Oh no, people are not spending less money on travel, they're spending more money on travel. Inflation expectations moon, because you get like Visa and MasterCard going, despite the war, people are spending more money. But then the Federal Reserve gets aggressive and goes, we are going to go, now basically 3x50. And so you're seeing those inflation expectations come right back down, which is really, really good. We're at 3.22% right now on the 5-year break even. We are substantially higher than where we have been in the past. But what I really like about the level where we are now is inflation expectations are roughly as high as they were in November following the Delta disaster, the Delta supply shocks. So that really means we are now no more fearful of inflation as we were during Delta, and that extra sort of war pain has been removed. That I'm very excited about and very bullish about. But I'm also bullish about the shift from the Federal Reserve, that now you have the most hawkish folks at the Federal Reserve, almost all of them in coordination, agreeing that, hey, like right now, we're on the right path. Like we've done policy tightening just with our verbal action. Now maybe it's time to stick with the path, the 50 BP path, and let's see what happens. Look, if ultimately inflation doesn't end up coming down, we don't end up having a peak by September, maybe we become more hawkish then. But personally, I have my fingers crossed that this loosening in sort of their stance, that we don't have to do this rug pull anymore, and that we're on the right path, is hopefully finally going to be bullish for markets. We might have to wait for the CPI report, though. When that CPI report comes in, that could be that final verification that we need to say, okay, if it comes in low, maybe the Fed is actually on the right path. So, bullish news for Saturday. Hope it makes you enjoy your weekend better. Check out the program's link down below and FTX.